Good morning, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the morning call. So this morning, when we walked in, futures were about 3 to 5 handles higher. They were shrugging off what were weak earnings from Intel, another weak earnings report in an earnings season that so far have been pretty underwhelming, but the market overall has been able to shrug it off. General Electric also reported earnings, also down this morning earlier. I'm not sure where it is now, but like I said, the market was shrugging it off, but futures did weaken as the morning wore on, and now we're actually bouncing as we get closer to the open, sort of trying to get back near the flat line. But we can take a look at the chart of the daily of the SPYs. As you can see yesterday, we had an inside day just to digest those 2 days of really strong price action. We started the week on Monday with that really potent sell-off that some people thought might be the start of maybe a deeper correction to start 2014 after we got a lethargic start to the year with finishing lower the first 5 days. But really impressive snapback to take us back to highs. And then yesterday's inside day, I think, is very healthy rest. Rob Smith and the Smith in the Black Room will talk about inside days and be looking for powerful patterns with inside days yesterday. So it's definitely constructive to see the market put in a little bit of rest after that really quick snapback. And this morning we're a little bit lower now, but we'll see whether we get another quiet day or whether we can break that inside day down or up. But anyways, yesterday we started to see more of that theme of divergences and being tactical and being stock and sector specific play out even more so than it has to start the year. And that's often what happens when you get into earnings season. You also get into a season right now when you're getting a lot of analyst upgrades and downgrades to start the year. But yesterday we saw solar stocks perform really well. Two big names, SPWR and SCTY, were the big winners in that group. And we're going to be looking at that sector to see if there's any follow through in some second tier type names. And I'll just run through those symbols right now. SPWR got a big upgrade from JP Morgan, rallied about 12%, I think, back up to highs here. Yes, it is a little bit hard to chase after yesterday's big move higher, but you look at that daily chart, it's just now knocking on the door of breaking out to new highs. So we'll see where it is this morning. 24-hour, let me go to the 5-minute. So it's at 35.62 this morning. So we're a little bit higher so far, and it looks like it might break out. So whenever you see a breakout like that, it could trigger additional momentum, despite the fact that it, like I said, is a little bit extended from yesterday. Something to keep an eye on. And then SCTY was the other big winner yesterday. This was really interesting. The SCTY basically announced, Elon Musk just continues to shake up all the industries that he's a part of, and SCTY basically announced a crowdfunding type method for the short-term debt, whereas most utility energy type companies get loans from big banks. SCTY is going to let Main Street finance its short-term debt, and investors were really encouraged by that sort of innovative approach to credit, and it led to a big move higher in SCTY, in addition to, I think, an upgrade for it as well, but finished 12 to 15% higher. I don't know the exact number, but a little bit extended right now, SCTY, whereas SPWR is still looking to break out. SCTY is at highs, so a little bit hard to chase. YGE is one of the second tier names that we are looking at right now to see if it gets a little momentum. And there's a compelling story along with the good chart pattern to go along with these Chinese solar names, is that China, the smog is absolutely out of control. They had to close schools yesterday or earlier in the week as a result of really extreme smog. And everybody I know who's ever been to China tells you that it's absolutely debilitating. It's hard to even walk around in a city when the smog gets bad. So there's reports that they're going to up their targets for solar energy output in an effort to get a little bit greener. And so YGE with a nice little pattern here, it ignited, put in a little flag wedge type pattern, looks like it might go higher, coupled with that story. And then TSL Trina Solar is another Chinese solar name that has bounced back up to near highs, put in a little bit of an upper level consolidation after a big igniting move to start the year. Looks like it might want to go higher as well. So when you see a chart pattern that aligns with some stories and a compelling narrative, then that's what gets you excited about a trade idea. And then you also see K and DI, that theme of China trying to get a little bit greener and reduce emissions and deal with that whole smog problem. K and DI is an electric car vehicle maker in China that, part of it is coupled with the Tesla hype. People think that maybe this is the next electric car maker to really make a big move higher, but we highlighted this wedge pattern off the charts and got a really big igniting move on Wednesday. So yesterday a little bit of a pullback as there were some warrants that were exercised in the stock, but I think with a little bit of digestion to work off those warrant exercises, I think this one could continue higher as well. And yesterday, talk about divergences, the banks, which has been one of the strongest areas to start the year, weakened, took a couple steps back after the Bank of America earnings helped this sector take a step forward. Citigroup, like I said, 2 steps back with a really not good report from Citigroup. You look at Bank of America, continues to be definitely our favorite in the group. On earnings, it gapped up big, didn't exactly get the gap and go to the upside that you'd like to see, but overall holding up well. As long as it holds some of this gap, then I think that's very constructive in the face of those weak earnings from others in the group. You look at Citi yesterday, big time gap and go to the downside. That definitely, overall it's not breaking any macro levels or anything like that, but now it's below the 8 and 21-day moving average. So in the short term, a lot of damage on that chart that's going to need to get repaired before Citigroup moves higher. Then Goldman Sachs yesterday also reported earnings that were lukewarm, I would say. Opened flat, but then finished down 2% after a lot of selling during the session. Also took it below the 8 and 21-day moving average. So just like we saw with the market on Monday, with the banks, see what kind of bounce we get in the banks to judge your composure for the next few weeks. So today, if we're able to snap back and reclaim a lot of those losses in Citigroup, in Goldman Sachs, that could tell you that maybe this sector, this is just a blip on the radar screen, and these might want to go higher. But in general, right now, I think that's not really the sector to be. A lot of times in earnings season, especially with the banks, you'll see reports come out and be very different. And you'll get over the next quarter, get a sort of situation where you have the haves and the have-nots in the group. Bank of America definitely looks like one of the haves, and Citigroup perhaps one of the have-nots, along with perhaps Goldman Sachs. We'll just run through some tech real quick. Apple, down a little bit this morning, but overall, really nice bounce recently after those comments from Tim Cook about the China Mobile deal. And it's very interesting to me because this China Mobile deal is huge for Apple. It's going to have a big positive impact on its earnings, but is it priced into the stock at these levels? I don't know. I think a lot of people saw this deal coming, and that was part of the reason why it rallied from lows, in the middle of last year. But I just feel like this is headed higher. Their next earnings report, I feel like, maybe not this one, but the one after, is going to reveal some huge sales in China after that network that opened up with China Mobile is 7 times larger than Verizon. So that just gives you a little bit of perspective on the potential there. But overall, a little bit down this morning, inside day yesterday. Google just continues higher, doesn't let anybody in. Facebook is one that looks constructive, looks like it's basing at upper levels, could ignite another move higher. And then Twitter is up this morning on news that it could get into the e-commerce business. We'll look to see where it is right now. It's 63.60, so really nice move higher there, about 5+% higher so far pre-market. This is one that I think was a tremendous buying opportunity down here. It held the 50% retracement from this big rally, and I think this one, it's just a matter of time before it's back in the 70s, in my opinion. Besides that, the ags have been strong, definitely a group to watch. POT was on off the charts. CF was on Scott's 2014 predictions. AGU looks good. Just another example of sector rotation and divergences in the market. And overall, I think earnings season is going to have a lot to do with the next leg in the market. Retail stocks have been really weak. We had those warnings from Lululemon and SodaStream. Then we had really weak earnings from Best Buy. JCPenney cutting 20,000 jobs, closing a bunch of stores. So the retail environment is very weak. We have a couple retail ideas short ideas on off the charts, and it looks like the stocks in that sector that haven't broken down yet are starting to weaken and look like they could get some downside. Just one example I'll pull up. Under Armour is one that we had previously as a long idea on off the charts, but with all that weak, the warnings and earnings that we've seen in the retail sector, this one has weakened considerably and is one that definitely has a lot of downside. If it continues lower, just see where it came from. Just in 2013 alone, this is one that could weaken. And overall, retail definitely not a place to be if you're looking to be long. Anyways, that's a little run through the charts and the virtual trading floor today. I'm sure Mark, Scott, and the rest of the crew will run you through some divergences as they come intraday. That's often what happens during earnings season. You get earnings and you get upgrades and downgrades in sectors, and it pushes stocks. And oftentimes you have to have quick feet and be a little more tactical during earnings season, as we don't believe you should take equities into earnings, maybe some options plays and stuff like that. But earnings season, definitely a time to be a little bit light on your feet. But this has been John Darcy here for the morning call. I'll see you back here for the daily recap.